Good afternoon and morning for the West Coast to LinkedIn Live attendees and YouTube Live attendees. Thank you everyone for joining. This is Michael Wardy, Certified Financial Planner and Regional Director at Source Advisors. Really excited to be able to introduce Lance Aligo and Simon Filip with KRS CPA firm. Gentlemen, welcome.
Hey, Michael.
Thanks, Michael.
So I would like, if you guys can just give your a brief introduction of each of yourselves, and the topic for everybody, and I know with the invitation that went out, most people, I hope, have received it, but the topic and the content today is all about PPP and what's going on with the current one, the forgiveness. We'll even go through a background to bring everybody up to speed on what the ideas were, but also towards the end of this, we'll talk about what the projections are or the ideas for PPP2. Not the most creative title, but maybe they'll come up with something else. So Lance, go ahead, give yourself, introduce yourself, and if we can hear a background about yourself, and then we'll turn over to Simon.
Sure. So Lance Aligo, work for KRS, manager at the been at the for about 5 years, going in, leave my ninth mostly.
Lance, your audio is going out. I'm sorry.
You want to kind of back, hang on.
These are some of the.
I'll talk a little bit about myself.
Yes, Simon, go ahead, and then I'll go back to Lance.
Tweaking his microphone. I'm Simon Filip, CPA. I'm a partner here at KRS CPAs in New Jersey. We're actually located in northern New Jersey, close to the city. My background and my specialty areas are tax. I'm a tax partner. My background is focused majorly in real estate and partnership taxation, and all the fun that comes along with that.
And there's a lot of fun that goes along with that, I'm sure, especially this year. Lance, is yours back up?
Can you guys hear me? Is it okay? I don't know what.
Yeah.
I'm a tax manager at KRS with Simon. Kind of have a similar background with real estate and partnership income tax. I've been with KRS for about 5 years. I'm going into about my ninth tax season now, and we've been on kind of the forefront of this PPP, from the beginning and leading up until now with starting the application.
Perfect. Thank you for that. Thank you for that introduction. So I just want to let's get into the PPP. And if either one of you, I know a lot of people know about PPP. Most, if not all, businesses are very familiar with it. I know CPAs and banks are very familiar with it. Can we just give a overall, kind of a generic, an overview of what the PPP is and what the intent was behind it? So if you want to just give an overview and a background of that, just to start out with.
So the program is my dad on my side.
Wait, Lance, I'm still getting it out.
Well, I'll keep the conversation going. PPP came around because of the COVID epidemic, and Congress needed to act and needed to act quickly. The problem that they were worried about was people getting on the unemployment lines, people getting laid off by their employers, and everybody, this mad rush to the unemployment lines, the unemployment systems, and they knew the states couldn't handle it. So part of their way of curbing that was the PPP, or Paycheck Protection Program. Now, the Paycheck Protection Program was just that, Paycheck Protection Program. It wasn't meant to give business profits or make them better off than they were previously. It was actually for you to keep your people on the payroll system, keep them employed, whether they were working or not, and off the unemployment lines. So it was basically the government covering your employees' payroll expenses, and with a little carve out for some rent and utilities.
Overall, from what you've seen, does it seem like it worked? Did it do what it was intended to do, in your opinion?
So I definitely think that people kept employees on the payroll that they would have otherwise have let go, and they would have been collecting unemployment because they either were shut down and had no sales and therefore no reason to pay people and no means to keep them on their payroll. So from that perspective, I definitely think they accomplished what they intended to.
Okay, well, that's good. Obviously, I know when it first came out, people were scrambling and trying to figure out where to go, how to do it. I know a number of banks were getting inundated with calls, emails, people visiting, trying to get the applications in. Did you guys experience the same thing back when it first started?
I'll try this again. Am I okay?
So far, yeah.
So yeah, back when it first started, kind of a rush, a mad rush to, get the applications in and, get money for, our clients. And, they're looking to us, they're looking to their bankers. And, there was a lot of confusion at first, where do we apply? Are the banks going to take the applications? What's the turnaround time? And it was kind of a free for all. But we got through that. We were able to, give the banks, what they needed as far as documentation to, release the loan and the fund. And, I think overall it ended up working out. And, a lot of our clients' favors. They got the money. They were able to use it. They were able to do what they needed to do with the money and keep their employees, on their books.
So now that the funds are out there, I know that the next step is what? What are people supposed to do from here? Now that they have the funds, there's a loan forgiveness, there's another application. Walk us through what the next step that a lot of these businesses that grab the funds, what they have to do next.
Well, first the funds came in, right? And now the next step is using the funds. And to do so, there was either a 8-week or so
I lost you.
There was an 8-week or 4-week window to do so. Am I back? Okay. And oh man, I'm sorry guys. I don't know what's going on. But losing my train of thought.
8 or 24-week covered period, Lance.
And then you're using either the funds for 60% payroll or 40%, other costs. Those other costs are mortgage interest, rent, utilities, things like that. And, you need to, across the board, you need to document where these funds are going. And, that kind of leads into the forgiveness process and with the application and, providing documentation on the forgiveness side. By now, we're in late December. A lot of those 24-week periods are coming to an end. So now the time where, these businesses will be going to apply for forgiveness. And, depending on your loan amount may depend on, the type of application you're, submitting and along with the different types of documentation you have to provide as well.
Okay. So,
and there's 3 different loan applications. I don't know if you want to talk about that.
Yeah.
Depending on the loan and the size of the loan, there's 3 forms. Lance, you want to talk about the 3508s?
Yeah. So, like Simon said, there's 3 forms. There's the 3508S, which is the closest thing we kind of have to, automatic forgiveness right now. That's for applicants whose loans are below $50,000. There's talks, and we can get into this a little later, that threshold may go up to $150,000 very soon. There's the second application, which is the 3508EZ. The EZ is there's 3 qualifications. Not to get too confusing. It's basically if you're self-employed, an independent contractor, you haven't reduced the salary of your employees by more than 25%, and you also maintained your employee count. Meaning, let's say you had 3 employees to start, still paid three employees, you brought them back on. That's kind of the second one. And the third one, which is the long form, which is, mostly probably what the majority of, applicants are going to use. That's for, that's the longer form. That's for, you have to provide documentation that you have used use the funds properly. There's a count for reduction of employees. There's a count for, if you were to reduce the employees' pay. And all this gets calculated into, overall what the forgiveness amount's going to be. Your forgiveness amount may be reduced if you reduce your employee count, if you reduce pay of your employees, and if you didn't use the funds, properly.
Got it. So the big question as we're getting to year end, and this I'm hearing but I know you guys are also hearing this, is how does this impact income taxes? Where does this all, Simon's right away. It's like, oh yeah, we want to hear about it, because I know this is going to be, if it's not already, a hot topic for a lot of clients.
We've been asking since this became law, what's going to happen from a tax perspective. And Congress, when they passed the act, said they don't intend for these PPP proceeds to be taxable income. That's all they said. The IRS, there's this code section 265 that basically says if you get money that's not taxable and you use it to pay expenses, you can't deduct those expenses. No double benefit. So the IRS came out and said, whatever you use those PPP proceeds for, you cannot take those deductions. So you paid your employees on the payroll, you paid rent, you paid utilities with the PPP funds, you can't take the deduction.
Okay.
So there's lots of clients, and what I'm seeing is clients with profit and loss or income statements showing break even or losses right now. And they're saying, I have nothing to worry about. I didn't make any profit this year. And we're taking a step back and saying, okay, how much of that represents expenses you used your PPP funds with? And we need to add them back. So even though you may think you may have lost money, you may actually have income and therefore a tax liability this year. And that wasn't Congress's intent.
Yeah.
It was horrible. They've actually come out and said, we never meant for this to happen. But the IRS is interpreting it based upon the law as it is. So it's going to take an act of Congress to change that.
So you could have a company, you said this, I just want to repeat this. You could have, your company could be in a loss position, but because you took PPP, you may actually be in a profitable position, but not know it, not realize it.
Not realize it, correct. Because you have the expenses that you used for PPP. Let's say you used $100,000 for payroll expenses, and that $100,000 represents your PPP loan or PPP proceeds. You can't deduct that, so you add it back.
So how are you guys approaching this with clients? Are you?
Well, I think we're going to talk about this more later, but let's put it out there right now. Congress is talking, they're negotiating, and they want what they originally intended. They don't want people to pay taxes as a result of these PPP funds. So they want to allow the deductions, but it's getting very close to the year end. People want to know what their tax bill is going to be. They want to plan for cash flow. They want to know what their balance is going to be due April 15th. So we're running two scenarios for our clients. Honestly, we're saying, okay, if PPP is deductible, this is going to be your tax bill. If it's not deductible, this will be your tax bill.
That's unbelievable. That's confusing, and probably a lot more work on your plates, because that's where it falls onto, is going through each scenario with clients and making sure. So when a client goes through the forgiveness application, are they doing it on their own? I know that a lot of clients went to banks to start the process. Are they going to the banks? Where do people go for this forgiveness application?
Well, I think it starts with the banks. At this point, most banks are accepting applications. There still are some banks that aren't. But most of the time what I'm seeing is you're getting a notification from your bank saying you're able to apply for forgiveness at this time. And then from that, clients of ours, most of the time they're sending their stuff to us and we're kind of taking a look to help. But other, we have clients that aren't doing that. They're handling it on their own as well. So it's kind of a mix. I would say that, there are trickier areas in the application, especially, on some of these bigger loans. The loans over $2 million are, going to be automatically audited. So we have, I would highly doubt, these in-house, they're probably not doing those in-house. They're probably outsourcing that to, their accountants and their trusted advisors to help. But, documentation is another area that you need to make sure you tackle and you look at. Simon, I don't know if you have anything to add with as far as.
Sure. So I actually have gone through the process of submitting some forgiveness applications, and the SBA put out the three forms: the 3508, the SCZ 3508, the ones Lance mentioned before. So a good exercise before you actually submit your forgiveness application would be to try and fill out that form yourself. If you can't, you're going to want to get somebody like your CPA to work with you on filling out that application. So from the banks that I've submitted, they don't ask for copies of the 3508s actually. What they're doing is through their fields in their application for forgiveness process, they're having you fill in items, which I assume on the back end is populating something similar to the 3508 form that they then transmit to the SBA.
So what advice for the person that is trying to do it on their own? Or they have a sole practitioner CPA that's still trying to get their, not sole practitioner, I shouldn't say that, any CPA, they're still trying to get their arms around it. What advice on the front end would you give someone to help them out?
I think, like Simon just said, go through that application. Take a look at that beforehand. See what you need to fill that out. Like I said, the documentation, the payroll reports, the proof, the invoices for utilities, rent agreements, things like that, and just kind of take it from there. But I think that's definitely the first step.
Just to expand on that, get all your documents in order for the 8 or 24-week covered period. Payroll reports, utility bills, copies of the lease, things that you would have needed when you submitted the application for the loan in the first place. Now that we're done, okay, get those documents together and then see if you can get 100% forgiven. If not, maybe you want to have somebody take a second look at it.
So if you send in the application and it comes back that you didn't get 100%, can you resubmit? Did I get that right or no?
Well, there's two levels. There's one, a submission to the bank. The bank then signs off or not, and then they submit it to the SBA to then approve.
I think what Simon was saying, if you're filling that out by yourself and you might have had an error, consult with someone on that process.
Okay, got it.
Just to see if you went through that the exercises correctly.
Okay, that makes sense. Okay, so let's talk about today and going forward. So at least for the next 2 weeks we have in the year, and I know a lot of people are already celebrating that. But what do you guys see in the before the end of the year happening with this? And then let's talk about what we may title it as PPP2 and what you project, or what are you seeing, or what are you hearing even?
First off, I guess future outlooks. If you're going to apply with a loan between 50 and 150, maybe you might want to wait, just because they're going to, maybe make this threshold 150, in the near future, within the next 2 weeks, with that new bill potentially, being passed. It was proposed this week. In addition to that, I guess, you want to get into the PPP too now, Simon. You want to start talking?
Well, I would also say, take a look, make sure if you're in your 24-week period, if it hasn't expired and you still have some room left, maybe you pay some payroll, maybe you pay some utilities, maybe you pay some rent. Don't let the clock expire on your 24-week period without spending all the money and getting 100% forgiveness. Because if you don't get 100% forgiveness, it turns into a loan, and cash-strapped businesses are not going to want to make loan payments.
Right. That's very true.
Also, I think hitting back on that other point with the projections, I think definitely have a projection done, see where you're falling tax-wise. And then one thing we didn't talk about was the QBI, the qualified business deduction. The qualified business deduction is 20% deduction of your net income. It came out with the Tax Cut and Jobs Act a few years back. And there is a condition that involves wages when coming up with this deduction. So another thing we don't know whether or not wages will be included in this deduction. Wages related to the PPP expenses. But we'll probably know in the next couple of weeks with this bill. But I think tax projections definitely are important, especially in a year like this.
Yeah, to say the least. All right, so let's get into PPP2. Let's hear about that.
So if anybody opens up any website to a news outlet, it's probably going to talk about Congress and sort of their inability to get things done. We have both a spending deadline, and also people are hurting because of COVID and the economic impact. So for the past few months, proposals have been thrown out by both parties, and both the House and the Senate, talking about what they want to do, what their plans are, and it gave us a little bit of an outlook on what they're thinking for more stimulus and more economic impact payments. So there's legislation, and I don't know, it could have changed while we've been talking. Right now, it looks like there's going to be another round of PPP. So internally, and I think a lot of people are calling it PPP2.
Not creative, but that's okay.
That's what we have for now.
Yeah.
PPP2, from what we're hearing, what we're reading, is going to be another round of loans that will be converted into grants if you meet the qualifications.
Mm-hmm.
Those, from what I'm reading, and everything's subject to change because this is all being negotiated as we speak, it's going to be based upon 2.5 months of payroll again, which is what the original PPP was based on.
Mm-hmm. Well, they'll definitely have they'll have better clarity on the implementation process, the requirements, all along those lines. Do you see them improving anything else with this? So
as part of that language regarding deductibility, Congress wanted us to not include it in income and deduct the expenses. So that language should be in there, allowing us to deduct the expenses we use with PPP funds or incurred with our PPP funds, which will be great news for a lot of people, because paying taxes on money that really didn't benefit you is kind of harsh.
Yeah.
And on the application side, you're going to need a lot of the same things you needed last year, when you're applying. So, going through that already and knowing what you need, definitely give businesses a leg up in the process.
True.
So the qualifications are going to be a little more stringent this time. Right now, from what I read, they're looking for 300 or less employees.
Okay.
So they definitely don't want big businesses, publicly traded companies dipping into these funds. And they're also looking at a 30% reduction in revenue in any calendar quarter compared to 2019.
Oh, still compared to
2019. And what I'm expecting is most businesses were shuttered, at least in the Northeast, in the second quarter of 2020. So that's probably going to be the quarter where you had the biggest loss in gross revenue.
Right.
So that's for the second time applicants though, right, Simon? Those are for
right. That's for PPP round 2. They're also opening it up for people that didn't get the original PPP program because the filing deadlines have closed or their banks were no longer accepting applications.
And those qualifications are going to be very similar to the original qualifications.
Yes, for those that didn't get in on the first round.
Yep.
Okay. And I got to think that there's going to be a lot better organization on where to go and how to apply, I hope.
Yeah,
I think towards the end, it got better. At the beginning, it was constantly the banks trying to get their portals open and waiting for guidance from the SBA. So there was a lot of delays there. Then banks only wanted their current customers. They weren't opening it to new customers. So some fintechs jumped in, like Blue Vine, PayPal, Cabbage. This is a second round. So you would think, one, the banks would be quicker and easier to implement. And two, you would hope that the government is going to give them guidance up front.
Yeah.
Before all the guidance was coming out on the fly.
Yeah. Good. What other advice as we're wrapping this up? And again, I appreciate you guys both jumping on Friday afternoon. What other advice can you give to businesses that are struggling, trying to figure it out in relation to the PPP and what's coming up next? Is there any insight or thoughts that you guys can share?
Well, for starters, if it's going to be this 30% reduction in revenue and you're a small business that only does your books and records once a year when it comes to tax time, you're probably going to want to do some accounting now, as soon as possible, to see if you meet that 30% reduction in revenue threshold. Because one, it needs to be met, and two, we don't know what documentation they're going to ask for, if any, to prove that you had that reduction. Mm-hmm. And if you want to be in line for those PPP funds, you better have either that knowledge that your 30% reduction is met, or the records to prove it, or both.
So preparing all that now, specific to 2019, right?
Well, specific to 2020.
2020, I'm sorry, yeah.
And the other side to that is, if they're going to compare quarter over quarter, and you don't have 2019 records by quarter, and if you just have, here's my annual gross revenue, you're going to need to break that down into a quarterly basis so you could compare and see if you had that 30% reduction.
Yeah.
It's likely going to be second quarter 2020 compared to second quarter 2019.
Got it. Okay. That's great advice and guidance. And if they don't have those records, or they don't have it down to the details, can they reach out to you guys? Am I setting you guys up for this?
Yeah,
Well,
definitely, of course.
Okay. And you guys work nationwide, so it's not, one part of the country. Your clients are all over the country, so that's not an issue.
yeah, we have clients in all around the country and also internationally.
Okay. Perfect. Gentlemen, thank you both. I appreciate it. I appreciate you guys coming on, giving some additional insight and guidance and updates on what's going on with these this crazy year-end planning, I guess, to add into everything else, and breaking away for a little bit to talk about what's going on. I appreciate it. And I wish both of you happy holiday season and to stay safe.
Thanks, Michael. Thanks for having us.
Anytime.
See you later.
Take care, guys.
Take care.
Bye-bye.